Hey guys, so one of the main mistakes in trading is trying to find a universal strategy that fits everyone and always works. In today's video, I'll show how to properly select a strategy tailored to the market, your trading style, and the specific situation, and not based on flashy promises. We'll analyze real pairs, entry points, and moments where the strategy simply has no right to work. I want to remind you that I have my own Telegram channel where I share strategies, some of my tricks, access to copy my signals, and a lot of interesting info about trading. So subscribe, link is in the pinned comment. So let's get started. There's no universal strategy that works in all market situations. So there are strategies that fit the current market. So the same market can be trending, ranging, or overheated. If you use the wrong tool, you'll drain your account even if your strategy is solid. So today we'll review the different types of strategies. Trend following when the market moves in a clear direction, counter trend when the market is overheated, and we're looking for a reversal, the right entry point. For each, I'll show what indicators I use, what the logic is, and of course, examples of entries. So look, right now we have a pair open. First, we need to determine its trend. We open the hourly time frame, see that there's a sharp drop down, but before that there was an uptrend, and now there's a breakout downwards. So it seems the situation will normalize. There are big candles, but it's still too early to say. So overall, this is quite a ranging situation, and I generally wouldn't recommend entering right now. After such dips as here in the hourly time frame, the situation is very shaky. The market could reverse in either direction. It's unpredictable, so we don't enter this pair. Let's pick another pair, and of course, don't forget, we choose the pair based on the payout indicator. So for example, this one has a low payout of 76. We need something above 80. So let's check here. See, here is a clear downtrend right now. We mark levels on the hourly chart. This is absolutely necessary. Here's a hint of overheating because it reached the previous low and now is reversing. So let's check what's happening on the minute chart. We mark the low here as well. The previous low was reached and now a reversal has started. So here's some overheatedness. The price was trending down and there's some overheating right now. So with this, we can approach with the counter trend view. So we choose the RSI indicator. So here it is, the Bollinger Bands. We see that the candles touch the upper band and a reversal might be possible right now, but according to the RSI, the situation is stable around 50. Of course, it's too early to rely solely on one indicator. We can wait for a moment when the price shoots up a bit and then open a sell. So we waited for the candle to reverse and shrink, get closer to the band, and then we can open a sell. So once the second candle forms, it's starting to level out, but still above 50, heading toward the overbought territory. So we could have entered reliably when it hits 70 precisely. I understand the direction from both the chart and indicators. I just opened a sell right now, and I expect it will go down at least to here, and within a minute I think we'll close in the positive. That's the logic. So if the price continues, I wouldn't average it down blindly. I'll either take the loss or just wait for confirmation with the second order in mind. So Note that I trade with the trend in the direction of the market, and counter trend only after confirmation. So indicators confirm the potential overheated condition, and the overall chart also suggests it might be time for a reversal. So I went against the trend and opened a short. So now a candle is moving down, pulsating slightly, but I think we'll close in profit. And yes, we did it. Perfect. As you can see, we earned 360. Excellent. Now I'll pick another pair as an example to work with different pairs and see what actions we take based on the trend. So let's pick euro dollar. I'm turning off these indicators for now because if we determine that the market is trending and not overheated, we'll work slightly differently. So right now there's a clear downtrend and the market is stabilizing. Again, I don't see any signs of overheating with this within this range. So we can select our tools. I'll think for a moment here. I say we use the MACD indicator. So when the MACD line and the signal line cross, it signals a potential trend continuation. So this crossover is almost happening and we can go with the trend. Currently the trend is leveling out, so it's possible to open a buy. But again, I'll wait for the right moment, check the 1 minute time frame, wait for a slight pullback and then go for a buy. It should move toward this level and the indicator confirms this. The lines are about to cross with only a narrow gap. And when they cross, a reversal is possible. So yes, right now a strong down candle is forming, reaching this level, and probably a reversal will happen. It might slightly break the previous low, but then it will reverse back. That's exactly what I mean. We can't rely solely on an indicator or just on the chart. Using both together always works better. So there's already a considerable downward move, and I think it'll break through to these levels. Now a climbing candle is forming, so we wait. Even if we close some trades and loss, remember, according to the Martingale system, we can recover our losses. There was a strong breakout, so we might close this order in a loss and reevaluate. So yeah, unfortunately we did close in the negative. That's okay. I'll wait for it to go down further and then open a larger buy order. So I'm planning to open another buy order right now. I'm just placing all orders right now, waiting for the reversal. Using the Martingale system, I set 600 to recover my losses. We identified the pullback point and entered the trade. So the price is now fluctuating, literally pulsing back and forth. So you can see the chart dipped below the bands again, and we have set the M57 setting, but I usually leave it at M57. There's room for experimentation with this. So generally, counter trend trading is a risky strategy. Without filters and indicators, it can blow your deposit because you start to act blindly. So that's why indicators are essential in counter trend setups. So on trend following trades, you can roughly follow the market direction, but you're still not immune to breakouts like the one here, which caused a loss. But now you see with the second order, the situation stabilizes and we're closing in profit. Excellent. So as you notice, 2 trades successful, 1 a loss, but overall the count shows over 500 in profit. So to summarize, it's important to highlight that I trade in the trend following direction when the market is trending, and I trade against the trend only after confirmation. If you confuse these approaches, no indicator will save you. So different types of indicators form your strategy. Some are suited for trending markets, others for counter trend conditions. This is a very crucial point, okay? And of course, you have to perform tech analysis. You can't rely solely on indicators. You need to understand the chart, analyze different time frames, identify the trend, mark key levels, and comprehend candle behavior. A strategy is not just a set of indicators. It's logic combined with market conditions and discipline. So if you understand when to use the trend, you'll definitely be profitable. Equally important is knowing when to not to enter the market at all. So if you understand all of this, you will already be ahead of most traders. So I want to remind you, I have a Telegram channel where I regularly share live trade entries, explain why I enter or skip trades, and analyze mistakes. The link is in the description. Be sure to subscribe. And now I'll be withdrawing my today's profit. So I select my wallet, enter the amount of 512. Click continue, and all funds are sent. They will arrive in my account in like approximately 10 to 20 minutes. I want to emphasize that it's very important to understand the market in order to choose the right strategy. There's no all-in-one recipe for all cases or all directions, so it requires an individual approach. First, you need to study the market, understand the trend, and then apply the appropriate strategy. That's a very crucial point. I wish you all successful trading. May everything work out for you guys. I'm always ready to help, and we'll see you in the future videos. So I'm glad to see you here. Be sure to subscribe. Goodbye, guys.